Warren Buffett once notoriously remarked, "Our favorite duration for holding is eternity." True to his statement, one of the most ancient stocks in Buffett's portfolio is Coca-Cola, which he first acquired in 1988 for $245 per share and still retains today, which is now valued at $588 per share, a $2,276 1% gain on investment. In terms of dollars, he had put in $1 billion, which is now estimated at $22.7 billion. That took some years, but what if you could almost duplicate your investment in just 1 year? It might sound too good to be true, but that's the advantage of Fidelity Index Funds, and some have consistently outshined the S&P 500. In this video, we'll clarify what these index funds are, how they function, and why they signify. We'll display the top 6 Fidelity Index Funds, and in the end we'll reveal a fund that can almost duplicate your investment in 1 year. Before seeing the top 6 Fidelity Index Funds, we first have to understand what these are, how they operate, and why to select them. Fidelity Index Funds are investment funds that strive to replicate the performance of a specific market index, like the S&P 500. They function by collecting money from many investors to purchase a diverse range of stocks or bonds in accordance with the chosen index. This straightforward strategy offers broad market coverage without active supervision. Why opt for them? They're simple, economical, and excellent for long-term investors. Most people aren't as skilled at picking stocks, so instead of just one stock, they can use these index funds to invest across all. Getting started as an investor can be intimidating. After all, there are more than 7,000 mutual funds to choose from. So sometimes it helps to start simply by looking at 1 or 2 fund families that have earned a reputation for excellence. To us, that includes examining Fidelity, and more specifically Fidelity Index Funds that can serve as the foundation blocks of a starter portfolio. This brings us to the top 6 Fidelity Index Funds to buy and hold indefinitely, a range from modest to highest year-to-date returns. Starting at number 6, we have Fidelity 500 Index Fund FXX, known by the ticker symbol FXAX. This index fund has been the gold benchmark for all index funds, and the standard set by this fund for the year-to-date yield is 20.64%. This means if the money explorers had invested $10,000 at the start of this year, the investment by the end of the year would be worth $12,600. That's a $2,640 increase in just 1 year. In the case of a $50,000 investment, the money explorers can earn a profit of $13,200, and with a $100,000 investment, the value would reach $120,600, a $20,600 growth in 1 year. This fund primarily allocates in U.S. stocks, with about 99.02% of its holdings in this category. It centers on sectors like technology, finance, and retail trade. To make it even better, this fund is a popular choice for retirement savings and is available in many 401k plans. Plus, it's cost-effective with a low expense ratio of just 0.015%. This fund has a track record of robust performance, averaging a 12.64% return over the past 10 years. When it comes to risk, FXX has a 5-year beta of 1, which means it tends to fluctuate with the market's ups and downs. It also has a positive alpha of 0.2 over the past 5 years, meaning it has outperformed its benchmark, the S&P 500, by 2%. Next, we have FDSVX, Fidelity Growth Discovery Fund, identified by the ticker symbol FDSVX. This index has been performing exceptionally well this year, with a return rate of 27.46%. It's ranked as a buy with a Zacks mutual fund rating of 2, based on factors like size, cost, and past results. Based on a year-to-date return of 27.46%, this fund will grow the money explorers $10,000 from the beginning of the year to $12,746. That's a $2,746 increase in just 1 year. With $50,000, that gain would be $13,730, and with $100,000, the investment after 1 year will be valued at $127,500, a $27,500 growth. The fund's primary sectors include technology and finance. In terms of performance, FDSVX has done quite impressively. It has a 5-year annualized return of 12.02%, ranking in the top third among similar funds. Even in a shorter 3-year period, it still stands in the upper third with a 12.9% return. When we talk about risk, it's crucial to look at the fund's standard deviation, which measures how much its returns vary. FDSVX has been a bit more unstable than in previous years, over the past 3 to 5 years. This fund has a 5-year beta of 1.01, which means it's likely to be as volatile as the overall market. On the positive side, it has a favorable alpha of 2.15 over the past 5 years, indicating that the fund managers have been effective in picking securities that outperform the benchmark, the S&P 500. Next, at number 4, we have Fidelity FNCMX, NASDAQ Composite Index Fund, known by the ticker symbol FNCMX. This fund has shown remarkable results, boasting year-to-date returns of 37.74%. This means the Money Explorer's $10,000 investment at the beginning of the year would now be worth $13,774. In other words, a $3,774 gain in a single year. For a $50,000 investment, that profit would be $18,870. In the case of a $100,000 investment, it would now be valued at $137,746, a $37,746 improvement in just 12 months. About 17% of the portfolio consists of technology, while it has a 5-year beta of 1.11, suggesting it may be slightly more sensitive to market fluctuations. However, it has a positive alpha of 2.8 over the past 5 years, indicating it has regularly exceeded the broader market. Its turnover rate sits around 4%, meaning it doesn't make as many trades as comparable funds, showing this fund has been in profitable positions and is strategically managed. Next on the list is FBGRX, Fidelity Blue Chip Growth Fund, identified by the ticker symbol FBGRX. This Fidelity Index Fund has had an exceptional year so far, with a year-to-date yield of 46.3%. With that performance, the Money Explorer's $10,000 initial investment will now be worth $14,638, marking a $4,638 gain in just 1 year. With a $50,000 investment, they would earn a profit of $23,190, and with $100,000, the investment would now be valued at $146,380, showing a $46,380 growth within the same year. This fund is doing so well because it targets large growth potential among established blue-chip companies listed in the S&P 500 and Dow Jones Industrial Average, meaning they're some of the dominant players in the market. These companies typically have market capitalizations of at least $1 billion. FBGRX focuses on those that display the highest potential for above-average expansion, which is why it's heavily invested in technology, about 38%, and consumer discretionary, around 22%. In its top 10 holdings, it has major names like Apple, Alphabet, Google's parent company, and Amazon. To top it off, with a 5-year average annual return of 16.3%, it stands firmly among the leading performers in its category. Now we move on to funds that have exponential growth. By the end, there's a fund that has the potential to double your investment in a single year. But first, let's continue with number 2 on the list. At number 2, we have FSBDX, Fidelity Select Technology Portfolio, known by the ticker symbol FSBDX. This fund has been remarkably strong this year, with an impressive year-to-date return of 53.83%. This portfolio provides a broader reach than many other tech funds, including software and industries like semiconductors, hardware, and fintech. It chooses stocks based on their potential to capitalize on technological progress, hence the 53.8% annual gain. Based on this, the Money Explorer's $10,000 investment at the start of the year would now be worth $15,385, resulting in a $5,385 profit. If they had invested $50,000, that profit figure would be about $26,900, and for a $100,000 investment, the total value would now be $153,830, marking a $53,830 profit in a single year. Performance-wise, FSBTX excels with a 5-year annualized return of 18.27%, ranking it among the elite in its peer group. The top holdings in FSBDX are well-known brands like Microsoft and Apple, recognized for their strong financial standings and intense demand. Apple and Microsoft hold the top positions with 18.2% and 16.4% allocations respectively, while Nvidia secures third place at 11.7%, largely due to its AI-related expansion. Although it's not entirely immune to market swings, FSBDX remains comparatively less volatile, as shown by its standard deviation and a 5-year beta of 1.18. This suggests some fluctuation, but its positive alpha of 4.5 proves it has consistently surpassed the broader market by a wide margin. Next, and sitting at the top of our list, the one that has outshined them all is Fidelity Select FSBLX, Semiconductors Portfolio, known by the ticker symbol SELX. This index fund has been a standout performer this year, boasting a year-to-date yield of 75.2%. Before illustrating what this return means in monetary values, let's understand why this fund has excelled so dramatically. SELX's remarkable results stem from its focus on the thriving semiconductor industry, propelled by the rising demand for AI, big data, cloud computing, and robotics. It's no surprise that SELX's top holdings include major innovators like Nvidia, Taiwan Semiconductor, Broadcom, and On Semiconductor. These have been consistently beating their benchmark, the MSCI US IMI Semiconductors and Semiconductor Equipment 2550 Index. In fact, it's a strong contender with a Zacks Mutual Fund rank of 1 strong buy. This fund offers diversification within the technology sector, spanning multiple industries such as semiconductors, software, internet, and networking. The fund truly stands out, achieving a 5-year annualized return of 32.48% and still maintaining a positive alpha of 10.8, showing it's been consistently surpassing the wider market. So how much would the Money Explorers investment be worth if they had invested in this index fund at the start of the year? Considering the year-to-date gain of 75.2%, if the Money Explorers invested $10,000 at the beginning of the year, their investment would now be valued at $17,520, representing a $7,520 profit in just 1 year. With a $50,000 investment, that profit would have reached $37,600, and for a $100,000 investment, the total would now stand at $175,200, equal to a $75,200 increase in 1 single year. That's an average monthly profit of about $6,260. In this video, we've covered the top 6 Fidelity Index funds that have consistently exceeded the market's performance. If you favor dividend-paying stocks, check out how to build a powerful dividend portfolio for strategies to earn over $2,000 per month in passive income. Thanks for watching. Don't forget to like, share, and subscribe for more smart investing tips from the Money Explorers. Keep exploring, keep growing.